Hello everybody, and once again welcome to Synonomics. Today I'm going to discuss Indian equities market. Yes, you heard it right, Indian market, and there we'll talk about the red hot sector, which is the defense sector right now. So today I'll give you some kind of little bit of a background why defense is important for India, why it's important for the world, because there are very few players out there, and then we'll come to certain companies that the large ones will focus on that. There are plenty of other small ones, let's not worry about it. And then finally I'll do the stock analysis, mainly from the valuation perspective, because as an investor, that's what you worry about. The stuffs you're buying, are they really rightly valued or they are overpriced? We'll talk about that. Well, let's look at the overall defense segment in India. So defense spending is one of the large spending in India. In fact, India is one of the largest defense spender in the world. Out of the total $2 trillion world spend in defense, India ranks number 4. Number 1 is of course US with 39%, China with 13%, Russia with 3.9%, and India at number 4 position with 3.6%. India's annual budget, and I'm quoting here FY23, is around 6 lakhs crore. In US dollar, it's $74 billion. Having said that, 50% of that gets spent on personnel and pensions. But according to the Atmanirbhar Bharat and the Make in India schemes, defense is getting a lot of prominence and focus. In the last 1 year, the total production, domestic production in India was around 1 lakh crore. That's 1 trillion rupees. And that's increasing, by the way. And many of the companies have been involved in state-of-the-art warfare systems, etc. We'll cover that. So let's look at those segments. But before I go to that, let me also highlight that why it's so hot. And the reason is very simple. It's very tightly held and the future looks bright. There's no dearth of order for these companies. And if I throw some numbers to you, most of these companies are owned by government, 75 to 85%, followed by all the domestic institutions. And nowadays there has been increased interest of the foreign institutions as well. These guys are called FIIs, foreign investment institutions, and they have been buying all these stocks. So well, let's look at some of the stocks, some of the companies rather. The top one is Hindustan Aeronautics. It's involved in the design, development, supplies of missile systems, helicopters, aircrafts, software development, etc. Tejas is one of the latest one in the news, which India is exporting to many countries. It's a missile, Tejas missile. It's a fighter missile, basically. The second one is actually Bharat Electronics, BEL. As the name implies, it's pretty much involved in the defense communication, radar system, underwater system, etc. Third one is Bharat Dynamics. They are involved in the guided missile manufacturing and underwater systems as well as the air systems. And the fourth one I'll cover also is the MAZDOCK. They are involved in the submarines and the warships. And these are the 4. Other than these 4, there are some others as well, which we'll kind of skip. Astra Micro, Cochin Shipyard, Garden Reach, and some of the other names are there. They are very small companies, so let's not worry about it. If you look at these companies, they have been on a stellar run for the last 1 year. Hindustan Aeronautics, 73% increase in the share price in 1 year. Bharat Electronics, 44%. Bharat Dynamics, 45%. And Cochin Shipyard, so not Cochin Shipyard, Cochin Shipyard is also at around 78%. If you look at MAZDOCK, that's at whopping 250%. Yes, you have heard it right. 250% in 1 year. And as I mentioned earlier, pretty much they are in short supply, and that's why this rush is out there. I would call it gold rush for Indian defense sector. Interestingly, as I mentioned, almost 75 to 85% of that is owned by government. But recently there has been increased interest of the foreign institutions, FIIs. So if you look at the time period from December 2020 to March 2023, there has been a huge increase in the percentage of shares they own. For an example, in Hindustan Aeronautics, in December 2020, FIIs owned 0.3%. Whereas in March 2023, it's 9.1%. Yes, 9.1% of the shares are owned by foreign institutions. Bharat Electronics is even ahead. 16% is owned by FIIs. And the other two that I'm covering, MAZDOCK as well as Bharat Dynamics, they used to be almost negligible, 0.1% or so. And right now they are pretty much at 3 to 4%. And that's increasing. And guys, looks like, in my personal opinion, looks like this run will continue for some time, because many of the fund managers, and to name a few, basically HDFC fund, they have started a very concentrated defense segment fund. They actually call it NFO, new fund offer. And I'm sure the others will follow. So all these guys are actually increasing their weightage in their portfolio, and they have been on a buying spree. And when we look at the valuations looks quite reasonable. Let's have a look at it actually. So I will compare the trailing price earning ratio and the 1 year forward price earning ratio. For some of my viewers who are new to the stock market, the trailing price earning ratio is actually the price earning ratio of the stock for the last 1 year, based on the declared result. Whereas the forward price earning ratio we are talking about is based on the estimates of 1 year's forward earning, so what they will earn in the next 1 year. And they're looking at the price earning ratio from that perspective. So look at Hindustan Aeronautics, trailing PE, 15. Yes, 15, it looks cheap, right? And the 1 year forward PE is around 22. Bharat Electronics, trailing PE is 17x and 1 year forward is 25x. Bharat Dynamics, on the other hand, looks slightly expensive from that perspective. The trailing PE is 23x and the forward PE is 33x. Whereas MAZDOCK, which had a 250% run in the price, still looking very cheap. From the trailing PE perspective is 10x, and from the forward earning perspective, the forward PE is 17x. And the others are pretty much in the same range, 10 to 11, 10 to 15, like that. So still from the valuation perspective, it's considered reasonable. And the reason is very simple. All these government companies, government-owned companies in India are given low multiples because government has control on that. And that's the reason why the price earning ratio of these companies were pretty suppressed. And just to throw some light as a fun fact, you will see many of the large companies have a price earning ratio of extremely small. For example, rural electrification, REC, price earning ratio ranges between 3 to 5. Similarly, if you look at some others, for example, Indian Oil Corporation, NMDC, you name it, and their price earning ratio is extremely in the low single digit. See, the government acts properly and tries to bring these companies pretty much up to the speed, there will be a huge opportunity out there. I like to highlight here that many of the government companies actually give big dividends. But in these defense stocks, as far as I know, I've not done good research on that, but their dividend yield is not that high. The reason is simple. They need to invest more in the developments. So the future looks bright for Indian defense sector, guys. As I mentioned, India has been exporting it to the multiple countries right now, and there is an estimation that in the next 2 to 3 years there will be $1.5 trillion exports being planned or kind of envisaged. So if you have missed out, think about it. Talk to your financial advisor, as this is not a recommendation, and you might consider investment after talking to your financial advisor. Let me remind you again and again, because when we talk about the stocks, I have to be very cautious. With that, everybody, thank you very much for watching. Happy investing. I'll come back again with another topic of interest. If you have liked this video, don't forget to share and subscribe. Till then, it's goodbye from me, your friend Pankaj Sinha. Bye-bye.